as we focus in on those tariffs and focus in on the potential impact to retailers. Retailers getting hit hard once again today. Capri, VF Corp, Under Armour, among some of the names lower on the day. Mary Ross Gilbert joins us right now over at Bloomberg Intelligence, who says the Supreme Court's decision offers some near-term margin support for some of those apparel brands. All right, Mary, let's talk about it here. I mean, I wanted to get your insights on Friday when this happened, because it seemed like those stocks were rallying on the idea that maybe there really was going to be some margin relief. Is that still in the cards? Particularly, we should point out, I mean, over the next 2-3 weeks, we're going to hear from a lot of them when they report earnings.
That's exactly right, Romaine. And it looks like now, since that was shifted from 10% to 15%, we were thinking they might have a 50% reprieve, because when you think about tariffs for apparel retailers, it's roughly around that 20% range. It just depends on the country. Some might be 19, some 17, some over 20%, but generally it's around 20%. And so when you think about the hit to margin for these apparel retailers, after mitigation measures, meaning price increases where they've shared the cost with suppliers, that's usually about half of the tariff, and also other cost savings or other measures that they've put into place, the hit to these apparel retailers in the U.S. has been somewhere in that 100 to 200 basis points range. So you were thinking, oh, wow, we're going to get 50% of that. But then right the next day on Saturday, when it changed to 15%, now we're only going to get a 25% benefit, or a quarter of the benefit. So now we're talking about a savings of 20 to 50 basis points. It's still a savings, and we'll see. I mean, clearly, this could be moving. But for now, at least what's been discussed and what's supposed to be, in place is the 15%. So yes, some margin relief.
Well, what I'm curious about, though, is do you think these companies are going to be confident enough to actually say that? Because, I mean, I know this isn't going to show up in the numbers for the past quarter, but when they start talking about their guidance, do you think they're going to be comfortable enough even articulating that? I know they'll be asked, but do you really put that into your model, knowing, A, that whatever Trump is doing right now could maybe be challenged again in court? We know that at least under 122, these are basically a 150-day window for him to do this, and then he would have to re-up it. So how do you even sort of make that known?
Yeah, so it's a good question, Romaine. And I think that it's going to vary by company in terms of how they report it. And I think they're going to continue on the basis of where they were before. And then they may say, if the 15% in place is in effect, then this is what it would be. But remember, it's for shipments that are now coming in. So it's not going to be, it's really new shipments. It's not going to apply to shipments that are already here likely for spring, summer. It's really going to affect shipments coming in for fall and winter. So that's where we're going to get the color, and each retailer is going to determine how they go about it. Many times they'll just decide this is what the margins are going to look like, excluding the impact of tariffs. And of course, they've been very proactive in select price increases, as we talked about. And so, there's been, we've seen this show before over and over again. While it does change, and they do find ways of mitigating it or passing it on.
All right, Mary Ross Gilbert over at Bloomberg Intelligence. We're going to, of course, keep a close eye on this over the next couple of weeks as we start to get more of those earnings out of retailers, including Home Depot tomorrow.